Hi everyone, this is an add-on video, alright. Now, people have been texting me and asking me what to do before tonight's FOMC meeting. And is it a good time to cover our shorts? Now, you know that everybody actually knows that we've been shorting the market over the last few days and we've been making money from the market. So, is it a good time to consider covering short? Alright, before the FOMC meeting. And this is what I'm going to share with you right now. But once again, disclaimer apply as usual. And thank you to AIMS for all the kind sponsorship. Now, the thing is this, we must understand right now that the open policy meeting tonight will be about rate hike. There won't be 50 basis point, it's minimum 75 basis point, okay? Minimum, yes, I'm not kidding you, because there are speculation that there could be as high as 100 basis point. Now, what's the reason? Because Sweden Central Bank just a day ago has launched a 100 basis point rate hike. Oh my God. So the question is this, would it be enough? But some people say that if you're going to have 100 basis point, the market will freak out because the market is actually more towards a 75 basis point. So the chances is, if you ask me, most likely it will be a 75 plus a 75. Now the market is looking at 75 plus 50. But I think it will be 75 plus 75 because that will not kill the market and that will actually still deliver the package because we do see the inflation is coming down and of course we saw some of the energy prices coming down, but undeniable shelter price, food price, and some of the grocery products are still at the high side. That's the reason why at the moment now the stock market, the futures are kind of flat right now, but the most important thing is this, I suspect it could be a 75 plus 75. And if you look at the 10-year yield, let's look at all the way back to 2014 all the way, we are now at the record level, my God, okay? For the last few years now, this is the record level now. The number is 3.6%. Oh my God, okay? There's a bit of pullback right now, but I believe that this is not going to stop. Any pullback to 3.5, 3.4 should see a base out, and then it will march further. Now, to me, it's all right. I'm pretty confident to say that, right? I think that we're going to see this, okay? We're going to see this coming in all the way to 4.5 by end of this year, okay? I'm pretty confident that this will happen. So, of course, there was some saying that if the, I think by Ray Dalio, if I'm not wrong, if the interest rate in US go to 4.5%, there's a pretty good chance that the stock market may go down by another 10 to 20%. Of course, Ray Dalio have been calling for sell for the longest of time, but nonetheless, this is from the guy who's running a big hedge fund. So I'm gonna just leave it there and let you think about it, okay, on your own, yeah. But meanwhile itself, most important is that I got something to share with you now. Okay, look at it, everybody. Now you can see that this is the my TWB chart. And you notice that the vertical blue line is actually indicating the days that we have the FOMC meeting. So let's take a look right now. So we have FOMC meeting, the first one on the 25th to 26th of January. That's the first one over here. And then we have the March 15, 16, the second one over here, and May 3rd to 4th. Let me just adjust this a little bit so that you can see this better. Here we go. Yeah, much better. And of course, we have the next one. It was in May the 3rd and 4th. Okay, so very simple. Let me explain this to you right now. If you look at the thing right here, okay, let me just bring it in. Now, you can see that back then, towards the FOMC meeting the first time, okay, the market was selling off, right? And once the FOMC meeting is over, yes, we see some form of selling first, but after that, the market recovered for a few days. That's interesting. And it happened again on the second meeting. The selling came in first. And after that, the market rallied. Okay, so there's 2 days in a row that this happened, right? Okay, so now I'm going to have more. Let me just change my color a little bit to show you better. Okay, so we have it again. The market sold down towards the meeting. And on the very day itself, right, on the 4th of May, my God, the market recovered so violently, all right? But of course, after that, the selling went down badly. Okay, so we have the same thing. The market goes down towards it. A strong recovery on the day itself. Of course, subsequently, we have two different views. Two went up, one came down. Okay. Then again, we have another view on that is the one in this June the 14th. And we have the market going down. Okay. And after that, then we see the recovery. Okay. So we've got a mixed bag right now. And of course, we have another one, which is the one in this July, whereby we have another rate hike. And what happened? The market came down first initially, went sideways, and then go up. Okay, so what do we have here for tonight? So from the picture, we can see that, right, every time we have an FOMC meeting, if the selling came in first, then on this particular day, likelihood the market will recover. So if you were to ask me, it's all right. Well, I think it'll be a better choice to consider covering your short position first, especially as we go nearer to the announcement of the news at about 2 a.m. All right, so that will be a better deal. And of course, if the market really recover, what you can do is that later on at a higher level, consider short again, because undeniable, the overall trend of the market has been down since the start of the rate hike. All right, so think about this. Right, make sure you do what you do, and I wish you the best. It's Kel signing off. Bye bye.